Welcome to Gracefully Graying. I'm your host, family law attorney Henry Gornbein. Every week on Gracefully Graying, we explore topics that all of us face as we are gracefully graying or have parents who are gracefully graying. Today on Gracefully Graying, we are going to be exploring an issue that I know very little about called reverse mortgages with my guest, Jason Yourofsky. Jason, welcome to Gracefully Graying.
Well, thanks for having me on. I appreciate it.
First of all, why don't you tell our viewers a little bit about your background and who you are?
I'm Jason Yourofsky. I came from same area, actually, that your son grew up in. We were local Detroiters, went to Country Day and then Michigan State Business School, graduated and got right into the mortgage business in 1997 and been doing it ever since.
And your company is what, Atlantis Mortgage?
Atlantis Mortgage, which I started in 2002. And we're here in Farmington Hills, Michigan.
Well, tell us about what types of mortgages do you do?
At Atlantis Mortgage, we run the gamut of first mortgages for purchase, first mortgages for refinance, home renovation loans, and then more recently, in the past 6 years, we've taken on reverse mortgages, as a lot of our clients are now retiring and have been looking for that source where they can go to a local company or a local bank to do reverse mortgages.
Our target is those who are retired, thinking of retiring, or have parents who may have retired with regard to gracefully graying. And one question that often comes to mind is when you're approaching retirement, you want to be as debt-free as possible. If you have a mortgage, should you pay it off? What is your advice as an expert in that field?
I always like to say, in everybody's perfect scenario, you have enough money to pay off your house, buy a home in Florida, and still have enough in retirement where you don't have to worry. The reality is no matter how hard people try, especially those in their 60s and 70s, a lot of people are still retiring with a mortgage. With that being said, there's so many different options out there, from a reverse mortgage to a forward mortgage, or as you said, even paying it off. I work primarily with financial planners to put together a plan for people in their retirement when it comes to doing a mortgage. A lot of people wait until retirement. I try to catch them while they're still in their job. It's easier to qualify for a forward mortgage. Reverse mortgages don't have income qualifications. However, a regular standard mortgage does. So some people wait to buy that home in Florida, finding out that their retirement income actually disqualifies them from purchasing that Florida home. So I always try to work with financial planners when people are putting together their plan for retirement and try to get to them and put together either a debt-free scenario where I'm not needed, which is a great scenario. However, a lot of people want to use their house in Michigan to buy a home in Florida, and a reverse mortgage is one way to do that.
Now, before we started the show, you and I were talking, and you said there's an age limit.
Yeah.
I always thought, reverse mortgages could be for anyone, but you're saying the age limit, you have to be at least 62?
Correct. The federal government actually insures these through FHA, Federal Housing Administration, and they set an age limit of 62 as the youngest for a borrower.
Why is that?
Well, simply put, a reverse mortgage is an annuity. The government is looking at the age of the borrower, the value of the house, and how long they plan on possibly either living in that house, to then come up with a percentage of what they can borrow. All big words that essentially mean this. If you're 75 years old, rule of thumb is it's your age minus 25. So if you're 75 years old, the federal government says half of the value of your house can be used either as a reverse mortgage to pay off existing debt, or a reverse mortgage to buy a new home, or a reverse mortgage just for additional funds for retirement. But the kicker is I do them mostly for purchases, which is another way to use a reverse mortgage that most people don't even think about.
What is a reverse? Let's start at the beginning, and why don't you explain to our viewers exactly what a reverse mortgage? I mean, it sounds like, I guess, what it is. A mortgage is basically you're financing, let's say, $200,000 on a house, so
Okay.
you take on a mortgage. A reverse is you have a $400,000 house, you're 75, and you can take $200,000 out. Is that a simplistic
It's a
explanation?
simplistic way of looking at it, but another great way of looking at it is you're a retiree and you just sold your home 2 stories. You're looking for a ranch You and I both know everybody says downsize, downsize, downsize. Try to downsize in our area, it's going to cost you $400,000 or $500,000. I have clients that sell a home for $300,000 and say, I want to pay cash for my new house. Well, how are you going to buy a ranch home if you only have $300,000? Simply put, a reverse mortgage can work. A $500,000 home purchase, in a normal instance with no mortgage payment, you have to put $500 down. On a reverse mortgage, you could put $250 down, and then the other $250 is your reverse mortgage. So you essentially bought a $500,000 house, and with a reverse mortgage, you and your spouse can live into that home until the second to die is like a life insurance policy, meaning if one spouse passes, the other spouse can continue to live in that house forever. And I say forever because the government takes out an insurance policy that guarantees no matter how long you live in that home, as long as you keep your taxes and insurance up to date on the property, which is a requirement, you cannot be forced to ever sell that property, even if you end up using all your equity up. So when people look at that, I say, why not utilize a reverse mortgage to buy your home in retirement?
Jason, what are typical interest rates on a regular mortgage now?
Regular mortgages range anywhere from 3.5% to about 5%. Similar on a reverse mortgage.
Okay, so it's similar.
Similar, yeah. Reverse mortgages, however, since you're not making a payment, the interest rate is actually calculated yearly based on what the government is lending at. So if the government's lending money, it's very basic, at 3.5%, that's the rate. If they end up increasing to 4%, you'll be paying at 4%. But since you're not paying, you're deferring your payments until you sell the home, most people don't really care about the interest rate. The interest rate essentially just becomes something that's tacked on. Now, give you an example. You borrowed a reverse mortgage for $200,000 and you didn't make a payment for a year. You'd end up owing about $210,000 when you sell the house. Same thing if you stay in there for 5 years, it's about $250,000. You still get the equity if your house is worth more than the $250,000, but the government insures you that if you live in that house for 20 years and you take it from $200,000 to $400,000 owed, and the value of your house isn't $400,000, that the government will pay off the difference. But if your house value is $600,000, you still in your estate get to keep the difference. So you always get the benefit if your home value goes up, but if your home value goes down or stagnates, the government takes care of that with their FHA insurance policy they take out on your home.
So in essence, going back to 2008, 2009, when we went through, the worst recession prior to the Great Depression, home values crashed. And in my area, we often did settlements and divorces where people would hold on to a house and there'd be a payout a number of years later.
Correct.
Well, what happened, there was often no equity to do the payouts. Mm-hmm. So if this happened again, and you have the scenario that we used earlier, Jason, where there's a $400,000 house, $200,000 reverse mortgage, and 20 years later, the house is only worth $250,000,
and you owe $400,000, and you sell it. Guess what? Government pays off the difference. And I say the government is the Federal Housing Administration, so they actually have insurance
to come up
for
with the
you.
difference.
No, you were never in the negative as long as you keep your taxes and your insurance up on the house. Never in the negative. But if the opposite happens and the value goes up to $650,000 and you owe $400,000, you still get the $250,000. People are afraid that they're giving up their equity no matter what. Well, it's almost like hedging your bet. If the values go down or stagnate, you get the benefit.
How common are reverse mortgages?
It's a great number. It came out to about 42,000 reverse mortgages in the United States were written last year, which seems like a big number, but it's actually down significantly. 25% decrease from 2017, and if you go back to 2015, there's about 100,000 reverse mortgages written in 2015.
So
Every
why
year
are the
they've gone
numbers
down.
Reversing rather than increasing, especially since, as we discussed earlier, the demographics of those who are, in their 60s and 70s are growing every month?
Well, it's because the government finally got smart. It was too good to be true. Everybody said a reverse mortgage was too good to be true, and it was. In 2008, the government took a huge hit, obviously, because they insured many homes that were upside down. Also, the rule of thumb used to be your age minus 10%. So that meant a 75-year-old could borrow 65% of the value of their home. Well, what happened was people would accelerate that, and you would look at the value of your home increasing at 1% to 2% a year. Government was losing money when people were selling their homes. So now they made the rule age minus roughly 25%. So if you're a 70-year-old, you're only getting 45% of the value of your house. So what they've done is they've cut out the number of borrowers that would qualify for a reverse simply based on their age.
I've called you up. I want a reverse mortgage. Take us through the steps from start to finish, Jason.
Great. A reverse mortgage is a simple application. First thing that we ask you is simple qualifying questions. Your age, if you have a spouse, the age of your spouse. How much you currently owe on the house and what your goals are. If all of those are in line, we then run something called reverse vision. Reverse vision is the exact calculation based on your birthday of how much the government is willing to give you. If that looks good and you say, you know what, Jason, I like this idea, we then send you to a HUD counselor. HUD is Housing and Urban Development. You'd call up and spend an hour on the phone with them. They basically take a person through fact-checking, information about their fiscal knowledge, making sure the person doesn't have any deficiencies that would make them so they don't understand or couldn't understand the documents they're about to sign. Once a person passes this, and it's a very easy 1 hour, they get a certificate to apply for the mortgage. Then we put the application into a bank that works as a fiduciary for the government to approve the loan. If then the appraisal comes back and the value is correct, we close the transaction and the person either stops making their mortgage payment by paying it off or they buy that new home with a reverse mortgage. Process takes 30 days, like a typical mortgage.
What if the parties are married and the husband is 70, but the wife is only 60?
Then they can do a reverse mortgage in 2 years. And there is no loophole. Because of so many people being left homeless to the old type of reverse mortgage where somebody would used to wink, wink, not include the wife, they don't allow that anymore. In other words, any non-borrowing spouse, still we go by the age of the younger of the two. So both borrowers have to be over the age of 62 to qualify for a mortgage. And it has to be a primary residence. A lot of people say, oh, I'm going to go buy a home in Florida as a reverse mortgage. Now, if you're planning on living in Florida and you can verify that you've changed your driver's license over and done other things to make that your primary, absolutely. But the banks have caught on to those types of people that are utilizing the reverse mortgage to buy a second home, and it's not meant for that. It's meant for the primary residence.
Okay, that's interesting because so it's for the primary residence. And let's go back to the first scenario where we had a $400,000 home.
Okay.
And both spouses are 75. Because if one's 75 and the other's 70, then you're dealing with the younger of the two as a triggering event. Okay.
Exactly.
Because that's an important factor. Let's say that you are entitled to $200,000.
Okay.
So you're saying you cannot take the $200,000 and put it on another home?
Oh, you could.
You can?
Absolutely, and that was where I was going to get to.
Okay.
Most people are sitting up here with a $400,000 home paid in full. Everybody thinks to themselves, equity is king. Well, with equity being king, what is that equity doing for you until you sell your house? As we both know, equity does nothing for you until you sell a house, meaning having a house paid off just saves you a mortgage payment. I say to the person, if your goal is to enjoy retirement and you owe a house that's worth $400,000 and you owe nothing on it, or a small $20,000, $30,000 loan, if we took a reverse mortgage out for $200,000 in a hypothetical scenario, and we handed you the ability to now buy a home in Florida for $170,000 in cash or $200,000 in cash if you owe nothing on your house, why not utilize that? And people say to themselves, well, my heirs don't want me to have a home that's encumbered by a mortgage. Well, if your heirs have a new place to go visit down in Florida and they look at that and they say, and it's paid in full and it's increasing in value, you may have given up some of your equity up here in Michigan. However, the enjoyment of life factor has to come into play. Reverse mortgages do allow people to take a non-liquid asset and not sell it, just reverse mortgage it to then go buy a home or something else that they can enjoy.
It's interesting because I've done shows with regard to financial planning and retirement and what are your goals. And, you know, the goal is you want to make sure that you have enough money to live out the rest of your life clearly. And here's where a reverse mortgage can help. But the other question, some people they want to have enough so they can leave their children and grandchildren a lot of money.
Mm-hmm.
But others may have the attitude that I want to live my life to its fullest.
Correct.
And on the day that I'm gone, I want $100 left in my savings. No one knows the answer.
I always love it. I love when they come to me with crazy scenarios. And some people say, I want to leave my kids the house. And I say to them, wouldn't you rather give your kids $200,000 right now on your house that they can use to buy their first house while you're still alive and seeing them enjoy the money? So even though a reverse mortgage, in the scenario one, they were buying a home in Florida, scenario two, maybe they take out a reverse mortgage to give their kids enough money to buy their first house. There's so many scenarios that people don't think about that a reverse mortgage could be used for, which is why I love working with financial planners and the next generation, meaning a child of a reverse mortgage, because when a person does a reverse mortgage for themselves, they're always looking for that second person to say, oh yeah, it's a good idea. I always like it to be a reason. There has to be a reason. So reverse mortgages aren't for everybody. Not everybody can qualify, and not everybody it works for, but some people it's really good.
What are some of the reasons why a reverse mortgage is not applicable to someone? And let's say they qualify age-wise.
A lot of people don't qualify debt-wise. If you owe, for example, $300,000 and your house is worth $400,000, you owe too much to have a reverse mortgage. If you only qualify for a $200,000 reverse mortgage, $200,000 isn't enough to pay off your debt of $300,000. So in your scenario, if you owe $300,000 on a house that's worth $400,000, you wouldn't qualify for a reverse. Another person's scenario is somebody that has a ton of money in retirement accounts that is throwing them off enough income. They have their house paid for in full. What's the purpose of doing a reverse? In all reality, there really isn't, unless they need to turn that illiquid asset into liquidity and still live in it. Otherwise, I don't recommend reverse mortgages for people who have enough assets where they really don't have to worry about their house. Their house can actually just be part of their estate.
And what would be a typical number that you're talking about there? It's hard to pin you down, but
$2 million, $1 million, anybody's guess. Depends on if they have Social Security and a pension, or if they're living off of their money alone. I always say that the rule of thumb, most people are, it's $5,000 per person in retirement and you are set. If you have more than that, that's wonderful. If you have less than that, a reverse mortgage typically works for you. So that's my rule of thumb, but everybody has different debts, and some people have multi-generational households, as we know. A lot of things happen, and you can't take into account other people's expenses, so I look at each scenario differently. Each scenario has a different nuance to it because you have to look at the person and if it's going to benefit them. A lot of people are going to retirement with debt, so we can use a reverse mortgage to pay off other than mortgage debt.
And that would be another question I have. When you were saying someone wouldn't qualify because they have not enough equity in their home,
Mm-hmm.
What if they have enough equity in their home, but they have $100,000 in credit cards or other debts?
I love those scenarios. I don't love those scenarios for the person having debt. I love those scenarios where people come to me and they've been living paycheck to paycheck in retirement off of for no reason.
Right.
We could take the $100,000 in credit card debt, the $100,000 in external debt, as long as there's equity in the house to be able to do so, consolidate that into the reverse, and they stop making payments altogether as well. So it really can be used as a financial tool. I like to say it's more of a financial tool than just being able to pay off your existing mortgage, because that's the fallacy. A reverse pays off your existing mortgage so you don't have payments anymore. And I just gave 3, maybe 4 examples of other places to use it, especially in purchase.
What are some of the other choices that we haven't covered, Jason, if a senior is thinking about downsizing or buying another home?
Well, the standard 30-year mortgage, which is essentially 3/4 of all mortgages written, is the standard 30-year fixed mortgage. I always like to say a rule of thumb on a 30-year fixed mortgage is every $100,000 you borrow is between $500 and $600 a month in payment. So some people have a comfortable number in mind as to what they can outflow for their living expense. If that is $1,500 a month, which is a number typical to this area for a high-end apartment or a rental unit, I say the same $1,500 a month could be upwards of a $300,000 mortgage. Why wouldn't you rather have the appreciating asset depreciating debt as the debt is paid down, and just keep making that payment. So in the scenario of somebody that can afford a payment, a standard 30-year fixed mortgage might be a better option for them, which obviously we would be happy to walk somebody through that scenario, but I like to use that along with the reverse as a tool depending on the financial situation of the borrower.
We've used 75 as kind of a,
Yeah.
because there you can get 50%.
Correct.
Is there any upper limit on the age for a reverse
no.
mortgage?
The highest we've done was a 92-year-old. If I remember correctly, it was about 72% of the home's value, maybe 73%. So that person had a wonderful scenario because they actually used it to purchase. They wanted to live independently, and if they needed to have 24-hour care, they had the money to do so. Because a person in that scenario was able to buy a home. They didn't buy a $400,000 house, but for example purposes, they could have bought a $400,000 house, put roughly $100,000 down, and had no mortgage payments on that house ever. So that left them a lot of cash to take care of in-home care, so that person could actually live their life without having to utilize a retirement facility.
So while there's a lower limit of age 62, there is no upper limit.
Correct. They actually have a number of 108 written into guidelines. I don't think they've ever written a reverse mortgage for over 108, but I do remember when I read through some literature that there is an age cap of 108. And again, it may not be still in place, but it was something I do remember reading and sort of chuckling to see if there was really an age number that they have in there.
Now, Jason, their closing costs,
Yes.
are these rolled into the mortgage, or is it something that people pay up front? How does that work?
On a reverse mortgage on an existing home, it's rolled into the loan. Typically, I say that the closing cost on the mortgage, including what FHA charges for the insurance policy, they call it FHA insurance, they range anywhere between 4 and 6% of the total loan, similar to a real estate agent, and they get rolled into the loan. On a purchase, however, since the loan is done on a new home, you as the borrower or buyer of the home would pay that 4 to 6%.
Well, if it's rolled into the loan, how do you get paid?
As a mortgage company, we're always paid based on the loan amount as a percentage. So if you borrowed $100,000 on your reverse, we're set at a compensation level from our lenders of, each bank is different, let's call it 3 to 5%.
Okay.
That is paid for based on the future earning income of that bank. So the bank doesn't take it out of the borrower. They actually pay us a percentage of your loan amount based on the income earned or the future potential income earned on that loan.
So why isn't there a greater push for reverse mortgages? I mean,
There was for a period of time when they were available for a larger swath of the population. Now, because of the decrease in percentage, it becomes very expensive. As you notice, there's maybe only 2 or 3 companies, including AAG, that advertise for reverse mortgages nationwide. Because when there was 100,000 loans written, that was a wonderful number. Companies were spending money advertising. Now that there's only roughly 40,000 loans written, it becomes too expensive and cost prohibitive to advertise. So we do it word of mouth with our financial planners, attorneys, and retiring clients. But most people don't have the money as a company to want to invest, because then the cost of expense of advertising has to be passed on to the borrower.
so basically, reverse mortgages, they're there. It's like you have a boutique as a mortgage company with Atlantis.
Yes.
And it's just one of the options would be the reverse mortgage, but most of your business is done through new home purchases.
Correct.
And refis. Would that be a pretty
Accurate?
appropriate?
Absolutely. If we did 1,000 loans in a year, reverse mortgages probably still only make up a handful, maybe 15 to 20 loans. And the reality, on a normal year that we close mortgages, as I said, they probably don't make up more than 5% of all the loans that we write. Would we like it to be more? Absolutely, but I'm not willing to spend money to advertise for them. We actually take them in as a more organic approach from, as I said, retiring clients and referrals from other people. The standard mortgage that we provide and what we do that's a little different, and the reason we're in business is we're a wholesale mortgage company. essentially like a wholesale car company or a wholesale broker for stockbroker. Wholesale meaning we're less expensive. What we do is we shop multiple lenders for the client, pitting lenders against each other to get the best deal for our clients. We don't charge fees. We're paid for based on the end amount that the borrower borrows from the bank. So in a mortgage company standpoint, utilizing a mortgage broker instead of going to a bank directly actually benefits a borrower. It's like getting a free person to do the shopping for you on your mortgage, and we end up getting the customer savings of anywhere between 1/8 to 1/4% on the rate, or typically our customers choose no cost. On a regular standard mortgage, there's about $2,000 in cost. Our average client pays $0 because we cover that cost for them, and that would be on a normal non-reverse mortgage.
Let's say you're advising your parents, and we're down to less than 10 minutes.
Okay.
What advice would you give them with regard to the issue of reverse mortgages?
Well, since one of the reverses I wrote last year was for my father, I could tell you that it actually works really well. His scenario was simple. After requiring to have a single-story ranch unit, he looked around and there was nothing being built in our area in the price range where he felt comfortable to pay cash. So we ended up selling his condominium, and he ended up purchasing a unit in Farmington Hills that was beautiful and made a single down payment, and now has a reverse mortgage and is probably my biggest cheerleader when it comes to reverse mortgages, referring other clients to me and finding more people in his group of friends that are utilizing reverse mortgages. So yeah, that's probably the best scenario that I can give you, is that my own parent used it. So
It makes sense. We're down to less than a minute. I'd like you to share any final thoughts with our viewers before we sign off, Jason.
The only other things that I could think of would be when making a decision about retirement, when making a decision about a reverse mortgage, it's always best to utilize a financial advisor. If you don't have a financial advisor, a next of kin, a child, anybody that can be there to help you make your decisions when dealing with retirement. It always makes decisions easier when you have somebody that you trust there with you, not just between you and a bank, you and a financial person putting money into an annuity. You should always have that person you trust. Sometimes it's an attorney, sometimes it's a family member.
So again, it's advisable to really include family members, children, so you're making kind of a joint group decision, because it's impacting upon you for the rest of your life, but it could impact upon your children, i.e. if there are care needs, if there are economic things, or if there are inheritance issues. So there are a lot of things, and I think as we are gracefully graying, reverse mortgage are basically, it's another tool for our toolbox to think about for those of us who are gracefully graying or have gracefully graying parents. So Jason Yourofsky of Atlantis Mortgage, I want to thank you so much for being my guest on Gracefully Graying. And I want to thank you for watching Gracefully Graying. Again, reverse mortgages is an important topic, and it's something that we should all think about, especially if we're thinking of perhaps a second home, or perhaps we need money to help us be more comfortable as we are retiring and moving on to the next chapter in our lives. Again, thank you for watching.